The silver market is holding its breath. As we approach the United States presidential election, uncertainty reigns supreme. This has left silver, often seen as a safe haven asset, in a delicate position. The current price of silver is hovering around $32.25. This cautious movement reflects the market's anticipation of the election results. A strong dollar often puts pressure on silver, while a weaker dollar can provide a boost. Silver is not just influenced by political events, it's also an industrial metal, sensitive to global economic conditions. Factors like manufacturing data, infrastructure spending, and technological advancements can all impact demand for silver. Let's dive into the details and explore the key levels and market influences shaping silver's path forward. Section 2. Election jitters and the greenback's grip. Section 3. Safe haven or industrial metal, silver's dilemma. Silver, priced in US dollars, often moves inversely to the greenback. A stronger dollar makes silver more expensive for international buyers, potentially dampening demand. Recent weeks have seen the dollar gain strength, partly due to safe haven demand as investors navigate election uncertainty. This dollar strength has contributed to silver's recent pullback from higher price levels. The election outcome could significantly impact the dollar's strength. A decisive victory for either candidate might lead to a period of stability, potentially benefiting the dollar. Conversely, a contested or unclear election result could trigger volatility, potentially weakening the dollar. For silver investors, monitoring the dollar's movements is crucial. Election uncertainty, a catalyst for volatility. The upcoming U.S. presidential election injects a significant dose of uncertainty into the market. Different administrations may have varying approaches to fiscal policy, trade, and regulations, all of which can impact the economic landscape and consequently silver's price. Historically, periods of heightened political uncertainty often lead investors to seek safe haven assets. Silver, with its long-standing reputation as a safe haven, could benefit from this flight to safety. The degree of post-election volatility will depend on the outcome's decisiveness and the market's reaction to the results. A clear victory with a measured market response might result in minimal volatility. Conversely, a contested or unexpected outcome could fuel market uncertainty, potentially boosting demand for safe haven assets like silver. Fed expectations, a potential tailwind for silver. Beyond the election, market participants are closely monitoring the Federal Reserve's monetary policy stance. The Fed's decisions on interest rates and its commentary on the economy can significantly impact asset prices, including silver. Currently, the market is pricing in a potential rate cut by the Fed in the coming months. Lower interest rates generally weaken the US dollar, which can be supportive of silver prices. Additionally, lower interest rates reduce the opportunity cost of holding non-yielding assets like precious metals. However, the Fed's decision-making hinges on various economic indicators, including inflation, employment, and GDP growth. Any hints of a dovish tilt, leaning towards rate cuts, could be bullish for silver, while a more hawkish stance, favoring rate hikes, could be bearish. China's economic engine fueling silver's fire. Turning our attention to the east, China's economic policies could play a pivotal role in shaping silver's demand outlook. As the world's largest consumer of silver, China's appetite for the metal significantly influences its price. Recent speculation surrounding potential economic stimulus measures from China's National People's Congress has caught the market's attention. Should China announce significant infrastructure projects or manufacturing boosting initiatives, it could translate into increased demand for silver. Silver is a crucial component in various industrial applications, including electronics, solar panels, and automotive manufacturing. Any uptick in China's industrial output would likely require more silver, potentially providing a boost to its price. Keep a close eye on any news or developments related to China's economic policies, particularly those concerning infrastructure spending, manufacturing incentives, or any measures aimed at boosting industrial activity. Wedding bells and silver's shine, seasonal demand in focus. Beyond the macroeconomic landscape, seasonal factors can also influence silver's price, particularly demand stemming from cultural traditions. As we approach the year-end, a notable driver emerges: the wedding seasons in India and Pakistan. These two countries have a deep-rooted cultural affinity for silver, often gifted as jewelry during weddings and other festive occasions. This surge in demand typically begins in the fall and extends into the winter months, potentially providing a counterbalance to other market influences. Monitor reports from bullion dealers and jewelry retailers in India and Pakistan for insights into inventory levels, consumer sentiment, and sales trends. Balancing act geopolitics and silver's outlook. In our interconnected world, geopolitical events can send ripples through financial markets, and silver is no exception. Trade tensions, political instability, and unexpected global events can all influence investor sentiment, potentially impacting safe haven assets like silver. Currently, various geopolitical factors are at play, creating a complex backdrop for silver's price outlook. For instance, ongoing trade negotiations between major economies can introduce volatility to the markets. If trade disputes escalate, it could fuel uncertainty and potentially boost demand for safe haven assets like silver. Staying informed about major geopolitical developments is crucial for silver investors. Charting the course key resistance levels for silver. Turning our attention to the technical landscape, let's identify the key resistance levels that silver bulls need to overcome to propel prices higher. The most immediate resistance level stands at $32.88. If silver can break decisively above this level on strong volume, it would signal a potential shift in momentum and open the door for further upside. Looking further ahead, additional resistance levels come into play at $33.08 and $33.37. These levels represent previous price peaks where selling pressure emerged, and they could act as hurdles for silver's upward trajectory. A decisive break above a resistance level, accompanied by strong volume, often carries more significance. Section 2. Finding the floor. Support levels to watch. Just as resistance levels act as potential ceilings, support levels act like floors on a price chart. These levels represent areas where buying pressure has historically been strong enough to overcome selling pressure, potentially halting or reversing a downward move. The most critical near-term support level for silver sits at $32.31. A break below this level could trigger further selling pressure and send prices toward the next support level at $32.04. Further down, additional support levels are located at $31.80 and $31.55. These levels represent previous price troughs where buying interest emerged, and they could act as potential areas where silver's decline might slow or reverse. A decisive break below a support level, accompanied by strong volume, often suggests a higher probability of further downside. Section 3. The 50-day EMA, a pivotal point for silver. Moving beyond static support and resistance levels, let's incorporate a dynamic indicator into our analysis, the 50-day exponential moving average, or EMA. Moving averages are trend-following indicators that smooth out price data, making it easier to identify the prevailing trend direction. The 50-day EMA specifically is often used by traders to gauge the medium-term trend. As of now, the 50-day EMA stands around $32.68, and it's currently acting as a dynamic resistance level for silver. A decisive break above the 50-day EMA could signal a potential shift in momentum favoring the bulls. Conversely, if silver fails to break above the 50-day EMA and instead experiences a sustained break below the $32.31 support level, it could reinforce the bearish bias. Section 4. Navigating the price action, a technical roadmap. Synthesizing the technical insights we've discussed, let's outline a potential roadmap for silver's short-term price action. Bullish scenario. For silver to stage a convincing rally, it needs to break decisively above the immediate resistance at $32.88 and the 50-day EMA at $32.68. Bearish scenario. Conversely, if silver fails to break above the 50-day EMA and instead breaks down below the crucial support level at $32.31, it would increase the likelihood of further downside. In this scenario, the next support levels at $32.04, $31.80, and $31.55 would become the subsequent targets for bearish traders. Technical analysis provides a framework for understanding potential price movements, but it's essential to consider the broader market context as well. In the near term, silver appears poised for a period of heightened volatility and range-bound trading as it grapples with a confluence of opposing forces. On the one hand, the looming U.S. election injects uncertainty, potentially boosting silver's safe haven appeal. Simultaneously, the prospect of Chinese stimulus measures offers a glimmer of hope for increased industrial demand. However, the potential for a stronger U.S. dollar driven by safe haven flows or a hawkish Fed stance could cap silver's upside. Additionally, the actual extent and timing of any Chinese stimulus remain uncertain, tempering excessive optimism. This interplay of factors creates a complex environment for silver traders and investors. Technically, silver's price action remains confined within a relatively tight range, bounded by the $32.88 resistance level and the $32.31 support level. The 50-day EMA hovering around $32.68 adds another layer of technical significance. Until silver breaks decisively above $32.88 or below $32.31, expect choppy price action with limited directional conviction. Traders should exercise caution and avoid chasing sharp moves in either direction without confirmation. Patience will be key as we await clearer signals from both fundamental developments and technical breakthroughs. Let's delve into specific bullish and bearish signals to watch for in the coming days. Catching silver's upward momentum. Silver's near-term outlook is clouded, but certain developments could ignite a rally. Watch for a breakout above $32.88 with strong volume. This would signal a shift in momentum to the upside. A weakening U.S. dollar could also provide a tailwind for silver. Chinese stimulus measures could boost demand for silver. Confluence of these signals creates a favorable environment for silver bulls. Section 3. Bearish signals. Recognizing silver's downward slide. Watch for bearish signals that could trigger a downward correction in silver's price. A break below $32.31 signals a bearish trend. A strengthening U.S. dollar can also put downward pressure on silver. Weak Chinese economic data could further weigh on silver's price. Silver's crossroads, navigating uncertainty and opportunity. The silver market is at a crossroads influenced by political, economic, and technical forces. The U.S. election adds uncertainty, affecting the dollar and silver prices. Chinese stimulus measures could boost industrial demand, but timing is uncertain. Traders face a challenging environment, balancing safe haven demand and industrial potential. Silver's fate hinges on breaking resistance at $32.88 or support at $32.31. Vigilance and adaptability are crucial in navigating this market. Key takeaways for silver traders and investors. Navigate the silver market's complexities with these key takeaways. Embrace volatility and manage risk. Don't be swayed by every headline. Establish a clear trading plan and set realistic profit targets. Watch the dollar and monitor China. A weakening dollar could boost silver. Monitor Chinese economic policies. Increased infrastructure spending could boost silver demand. Respect technical levels and seek confirmation. A break above resistance or below support could signal a shift. Seek confirmation from other technical indicators. Stay informed and adapt your strategy. Stay informed about global developments and adjust your strategy. Successful trading requires knowledge, discipline, and patience. Manage risk, stay informed, and adapt to market dynamics.